Hey folks, and welcome back to another video. I want to start this video off by saying thank you for all the support and response that I've gotten. I appreciate that. I'm glad that someone finds the stuff that I upload useful, and the reason I decided to upload videos and publish the stuff that I do is because whenever I teach something out loud, I always find myself learning more about the topic. So if I can educate myself and educate someone else simultaneously, it's a win-win situation. So thank you for that. I've gotten a few DMs and comments regarding what session I trade and what time intervals you should actively be looking for setups to happen. So in today's video, I will quickly go over certain rules that makes it easier to stay consistent, at least in my opinion. So, number one, you always need a high time frame delivery. I must see a 15-minute plus time frame delivery, and that delivery preferably has to align with my bias for that given day. When you trade with the drawn liquidity, the win rate increases drastically. But with screen time and experience, you can go against your bias for short-term scalps and stuff like that. But generally, you should always follow your bias for the highest possible win rate. Number two, if the pair that I'm trading has swept internal liquidity, that automatically invalidates the setup. That also means that if I'm trading NQ and I want to place my entry on NQ, but ES has swept internal liquidity, I will not place the trade on NQ, even though NQ did not sweep its internal liquidity. Because when that happens, where ES sweeps a high but NQ does not, that's what we call a bearish SMT. And if we had swept a low on ES but not on NQ, that would be a bullish SMT. And I do not want to enter a long position after a bearish SMT, and I don't want to place a short after a bullish SMT. So I need both NQ and ES to not have swept their internal liquidity. And number three, when trading fair value gaps, you take the first fair value gap that forms after the high time frame PD array has been hit. If there's multiple fair value gaps, I include all the fair value gaps in my stop. And if the stop is too far away, I don't trade it. Generally, the setup is better if there is only one fair value gap that forms. That way, there is no confusion on which one to take. So if you're on the 1 minute time frame and there are 2 or 3 fair value gaps, what you can do is find another time frame that only has a single fair value gap, but don't go higher than the 5 minute time frame. I never place any entries above 5 minutes. And this also applies when trading the inverse fair value gap. Number 4, I only start looking for setups to form at 7 a.m. New York local time, and I stop looking for setups to appear at 4 p.m. New York local time. And I do not place any trades during lunch hour, and I stop trading 30 minutes prior to lunch hour, and I start trading again 30 minutes after lunch. So my trading hours are 7 a.m. to 11:30 a.m. and 1:30 p.m. to 4 p.m. And whenever you hear me referring to a specific time, it is always referred to in New York local hours. And number 5, for my take profit, I always target internal liquidity or equilibrium fair value gaps. And for my stop, I always place it above the high. And if that's too far away, I can either put my stop at the low or high of the candle that created the PD array. But one of my favorite ways to place a stop is to not even place one, right? That sounds crazy, but I very, very often use a mental stop loss. And my mental stop is always when we violate the PD array that I place my entry off of. So if I entered off of a fair value gap or inversion fair value gap, I close my trade as soon as we close outside of the fair value gap. And the reason for this is oftentimes a candle can wick very far from the fair value gap, but end up closing inside of it and still respect it. So by not having an actual stop, I avoid getting stopped out of my position when this happens. But I also have the discipline to actually close my trade in negative P&L as soon as we violate the PD array. So if you're new, I would not recommend not having an actual stop. So please note that. Let's jump onto the charts and I'll show you. Right here we have an inversion fair value gap, right? There's only one fair value gap right here. There's only one inversion fair value gap right here. And if my bias is bullish, this will be fine. I would like to have gotten an entry further down here because right here we have swept this. So I probably would not place this, but this is just to show you what it looks like when there's only one fair value gap in the leg that I'm trading. So if we ignore that this is here, this will be fine, especially because we also just swept this low right here. That is very, very nice. And we hit the inversion fair value gap before we took out this. So this would be completely fine. It becomes higher probability if we go down and sweep the low right next to it before inverting the fair value gap that I want to place my entry off of. So that is how it would look if I were to trade an inversion fair value gap. And my stop loss would, if possible, go between these relative equal lows here. But if I am not satisfied with that, maybe I don't like the risk reward that it provides, I can either place my stop here below the low of the candle that created the inversion fair value gap. That minimizes my risk a lot, but it also increases the chance of my stop getting hit a lot, right? And when I just talked about the mental stop loss, what I mean by that is oftentimes the candle can do this. It can come down, come down, come down, stop me out, and then close all the way back up into the inversion fair value gap and still respect it. So whenever I have a mental stop loss, as soon as we close outside it, I close my position. It can be very difficult to close that position in negative P&L, but if you can do that, I would recommend using the mental stop. So yeah, I also want to note that an inversion fair value gap or a normal fair value gap becomes more valid when it's a BPR, which this one is right here. So yeah, I'm very confident that we're going to go higher if we violate an inversion, or sorry, a fair value gap, which we did. And that fair value gap was also a BPR. So that just adds to my confirmation that we are in fact going higher. Okay, let me find some more examples. If we go to the hourly time frame, for example, and let's look for a PD rate to get hit. So right here, for example, we hit an inversion fair value gap on the hourly time frame. So what I would do as soon as I see this, especially if my draw is lower, maybe my draw for the day was here, maybe it was down here, whatever it might be, I would jump to the lower time frame. Let me go here, go to the 2 minute. And then what I would do is I would look for a lower time frame PD array, right? In this case, let's say I wanted to trade a fair value gap. This moved way too fast for me to even consider getting into this position, okay? So whenever you see this, as soon as you hit, what you can do with experience is find a time frame that only has one inversion fair value gap. The 4 minute only has one. And if you have enough screen time, what I sometimes do is as soon as we violate this, and I'm very confident that we're going lower, I can place my entry as soon as we close. This is maybe a bit too much, but as soon as we close outside the fair value gap, making it inverse. If I don't believe that we will go and retest it, but I'm very confident that we are just going to continue to drop lower without any sort of retracement, I can place an entry based off of just the violation, not the actual retest. So that can happen, but that's with a lot of screen time. Let's see if I can find any more examples. Delete this up here. So right here, we hit a bullish fair value gap. So let's go ahead and drop to a lower time frame to look for an entry. Yeah, so there's one right here. We have not swept internal structure yet. There's only one fair value gap right here. So this would this I would be perfectly fine with entering. We are delivering from a high time frame PD array. There's only one fair value gap in the leg, and we have not swept internal structure yet. Now there is a very, very small one right here. So if that concerns you at all, you can move your stops to break even at that PD array to ensure that it does not become a loser, right? And again, right here, this would be way too far of a stop loss for me to want to get in, right here. Even though it's not a bad stop loss, we're only on the 2-minute time frame. I do not personally like it. So what you could do is, again, place your stop below here. That's the candle that created the inversion. So that makes a way better RR. Or you could have the mental stop that I also taught you. Keep in mind that I do not only trade inversion fair value gaps. I saw someone asked if I used the inversion fair value gap strategy, I think he said. I do not use an inversion strat. I use all PD arrays with a higher time frame confirmation. Okay, so it's not only inversion fair value gaps. I also place entries off of just fair value gaps and stuff like that, right? So right here, for example, this, maybe I would have taken this. There's a fair value gap right here. I would place my stop below or low. We went up. You get the point. So yeah, no, I do not only trade inversion fair value gaps. I trade all PD arrays with just with a higher time frame delivery. And of course, all of this has to happen within the time that I provided, right? From 7 a.m. to 11:30. Then from 1:30 to 4 p.m. all New York local. So again, here we have a fair value gap right here, an hourly fair value gap. I would go over here to look for an entry. So right here is a very, very beautiful inverse model. Right there, there's only one inverse fair value gap in the leg that I'm trading. Later down the road, there's one right here. So if that concerns you, move your stops to break even as soon as you hit that fair value gap to ensure that this does not become a loser, okay? The reason I trade inversion fair value gaps is if I believe that the price is going to take off without a lot of retracement, a fair value gap is not always going to work. As you can see, none of these fair value gaps were hit on the 2-minute time frame, but the inversion fair value gap was. So that is the reason why I trade a lot of inversion fair value gaps, is because a lot of the time when price delivers from a high time frame PD array, it can just skyrocket without you, and then it's way easier to get an entry off of a inversion fair value gap rather than a normal fair value gap. But if there's no inversion fair value gap, but there is a fair value gap, then I will just take the fair value gap, right? I also take my entries off of order blocks or breaker blocks or whatever. But in the beginning, if you're just starting out with this model, I would recommend finding one PD array and just sticking to that and getting very, very good at that. And then once you've developed more screen time and experience, you can start to trade other PD arrays with the high time frame delivery. But in the beginning, I would only focus on the inversion fair value gap or the normal fair value gap. So let's see if we can find an example with a normal fair value gap. There was not one here. So let me check if there's anything. There's one right here that we hit. Let's look at this and keep in mind the PD array on the higher time frame. I do not care if that has swept internal structure or not. That's fine with me. So again, what do we have? We have an inversion model right here that you could have taken. There we close right here. But this is probably not one that I would take because we have one right here. If I did, I would move my stops to break even as soon as we hit this to ensure that it does not become a loser. Let me see if I go to 1 minute. See if we can find there was one here on the 4 minute, which you could take. This one right here. It's also a BPR, right? It's a fair value gap here. Another one here. So this one you could take. But generally, when the fair value gap is so big, I don't like trading it. So what you could do in this case, you would not have gotten filled if you were doing this, but you could find the middle point of this PD array right here using the ICT premium discount Fibonacci, and then place your entry off of that to get a better entry. And the reason I wanted to enter this is because we did not sweep internal liquidity yet, right? We had not swept it. This is what it would have looked like. So yeah, this is absolutely a setup you could take if you are comfortable with having a bigger stop. So I hope that this video was helpful to you. Keep in mind that I'm not going to sit here and show you all the different PD arrays that I use, because that's going to take forever. And I know 90% of you guys do not want to sit through such a long video. So I just want you to understand that other PD arrays does work with this too. But the inversion fair value gap is extremely nice. I really enjoy using the inversion fair value gap, because it adds to my, I get more confidence when trading inversion fair value gaps, because we are violating a PD array indicating that we are going to go lower. So yeah, I am not only taking inversion fair value gaps. All PD arrays work just fine. But again, focus on one. If you're new in the beginning, focus on one, master it, and then start adding more PD arrays to your list. But I would recommend the fair value gap and the inversion fair value gap in the beginning. So I hope you enjoyed. This was a quick kind of rule video, I guess you could call it, a checklist for my model. These things have to be met in order for me to enter a trade. There's not a lot, but it minimizes the confusion and stuff like that when you apply rules to certain setups. And I had some people ask me if I could do it, so of course I did it. So I hope you enjoyed, and I hope you learned something. And until I see you next time, stay blessed, and bye-bye.